G'day, Jarrad Mahon here from Investors Edge Real Estate, bringing you my latest Perth property market update. And it's my first one for this year. What a lot has been going on too. I meant to come to you in March, but I've been waiting for the Residential Tenancy Act to change, and also waiting to see what the true impacts of this coronavirus is likely to be. Hasn't it been a crazy time? And I've certainly been doing way too many walks each day, and it seems like there's not much else to do when we can't go to cafes and can't go out. So yeah, my toddler and I are getting lots of exercise and checking out all the national parks and walking trails around. So I hope you've been keeping sane and keeping well. And today I really wanted to take a time to go deep into the sale market with you, the rental market, go really deep into the impacts so far of this coronavirus, and then also look at the other things that are impacting our market other than the coronavirus, what the latest stats are telling us, and then some of the things to do if you're affected or want to make the most of this time to survive and thrive ahead. So sit back and I'm going to take you through it all now. So in the sale market, the number of properties for sale has decreased considerably over the last couple of months. We're now down to just 12,068 properties. We've had a sharp decrease since March last year, and with the market being shocked, what's happened is anyone that is a discretionary seller, as in they don't need to sell, has come off the market, and anyone that was coming to the market, a lot of my clients that were planning to sell, I've just said to them, hey, if you don't have to sell, you don't, now's not the best time to be on, and we're just waiting and see to how the market responds and if buyers are going to start coming back out again. So in the home open space, we had that disallowed, and we are able to do private viewings, and we are able to use walkthrough videos to show the properties to people so that they can get a good feel for them over the internet. But we are still seeing a lot of hesitation in the market from buyers just wanting to know, get some certainty with both their jobs and with where the economy is headed before they jump in and commit. There are some sales occurring per week, but you can see we've fallen off a cliff. We had just 286 sales over the last week, and that's the lowest on record since I've been keeping it over the last 7 years. And prior to this coronavirus impact, we were starting to trend back up again slowly, which was nice. And we could now look back and see that we were starting to get around into a slight recovery, right on the doorstep of seeing more positivity in the market. I think I emailed you in February, late February, about the positivity I was seeing, and I was selling properties at first home open. Real estate was becoming fun again, but that was short-lived. A couple of weeks later, we started hearing about this coronavirus, the restrictions started happening, and fear started taking hold for the most part, and we were all just pretty sidewiped by this whole coronavirus. I, for one, at the beginning, didn't pay it too much attention, didn't want to get trapped in that negative news cycle, but as things started to unfold and started to impact all of our lives, you couldn't help but see that the financial impact was going to be far beyond the health impact. Now, thankfully, we've acted fast. We haven't had that health and impact, and we've limited that. We now need to start looking ahead to what's the road to recovery and how long is this going to last and what sort of restrictions are going to remain, and can we start looking to relax those a bit. So those are the discussions that are starting, and I'm sure behind closed doors of Parliament it's their main focus. But as you can see, very difficult to get any property sold at the moment, and that's why I'd suggest just waiting and seeing if you don't absolutely have to sell now. So the median house price was continuing to slide, and this goes to December. So you can expect over the last quarter as well, when the March stats come out, that we will have taken a bit further of an adjustment. We're not talking massive adjustments each month. We were starting to slow a little bit, but we didn't have the number of buyers yet back into our market to see this median price turn around. And that's why I wasn't calling a full recovery yet. Overall, there was many suburbs that had started coming back, and you've heard me talk about the north coastal strip and the western suburbs that have been a lot more hot than a lot of the outer suburbs and that are still dropping in value. So you can expect with this coronavirus, it pretty much just worsens the effects that we had prior to the coronavirus. So those north coastal suburbs will hold up pretty well. The western suburbs will hold up pretty well, but the outer areas I would expect to be affected the most by this. So when we look at the unit median price to December, that was also still on a trajectory downwards, and the median, the unit price is expected to fall for a further 12 to 18 months after the house prices recover. In any case, if you've seen any of my updates before, that's the lag that the units are having behind the sales, or behind the house prices, sorry. So Perth listings and average selling days. So you can see here in a bit more of a micro scale that our listings were dropping, and so was the average selling days. We had a considerable drop back in December quarter, which was lovely to see, but short-lived because of these impacts that we've had. So this is going to be starting to get back way up there, higher than prior to when we, hit all this. So you can expect it will be above 90 days for selling time now. So on the rental market, we've had a continual decrease in the number of properties for rent, and we're at 5,703 now. So the lowest that we've had in quite a long time. We were last at these levels back in approximately June 2015. So the rental market's holding up very well compared to the sale market, and we're still readily getting properties away. People needing to have accommodation, and if they're deferring buying for now, as we're finding many tenants that were going to move out are not moving out, they're putting back their buying decisions and staying in place renting for longer. And anyone that's new to the state is likely going to rent when and if the borders do open up again. So I expect there'll be a strong increase in rental prices ahead, and the number for rent will probably keep gradually drifting down because there's not many investors buying, and the tenants in place are staying longer. So the rental vacancy rate, and this is put together quarterly. So the last date we have was to December 19, and you can see that we dropped to 2.4%, and generally anything under 3% we see pressure on rental prices increasing. So that was good to see us finish out the year that way. I'm expecting that the vacancy rate will be just as tight, if not tighter, because as you can see in our previous slide, the number for rent has continued to decrease. So the median house price, we had a slight rise. I've gone back and updated these slides. You will notice I've zoned in on just the house prices median, not the rental prices, the unit prices. So I'm going to just track and report on this because the majority of data is available for the house prices, median rent. So you can see that it went up in January 19, and it was at 360 odd, and went up to 370 in December 19. So we were adjusting rents upwards, and unfortunately for investors, that's going to be put on hold for the next 6 months as far as existing tenancies are concerned. Of course, when we go back to the market, we can fetch the market rate, and we are still seeing rental prices hold strong and I don't expect this to probably continue as rapidly as we were starting to have, but I expect that it will at least hold its rental price. So, Residential Tenancies Act changes, now law as of yesterday, so I thought I'd come to you straight away with a summary of the changes, and this by no means has all the detail. We need to get into the actual act, and with our landlords and tenants, we'll be working things through to help everyone get through this period. And our focus as a property manager is definitely remaining on helping our tenants, and no one wants to go through a difficult situation. So it's a case of getting access to as much assistance as possible, keeping the communication up with your property manager and both parties, and not also remembering that many landlords have also been affected during this time, and we just need to see what's possible from both sides. So if we are coming to an agreement on a rent reduction, in many cases that amount is not just a straight forgiving of the rent. We're looking to then have a deferred payment on a portion, so that has to be deferred until after this emergency period. So higher payments after the 30th of September with a reduction in the meantime. And keep in mind that landlords have to pay, most of them had a loan, most of them have to pay interest on this loan, and even if they're able to pause their loan, they still have to pay that interest later too. So it's reasonable to expect that tenants, if they have a reduction in rent, should be paying it later too. But many landlords are giving them a straight reduction if it's possible within their worlds to do that. And we are doing everything possible to see that communication's kept up and that everyone's helped through this. So, to the changes, there's no evictions allowed for non-payment of rent for those that are affected by hardship. And I urge that this does not take away the requirement for tenants to pay rent. That debt does still accrue, and you are still owing of that rental amount. And come the 30th of September, if you're still in arrears and a new agreement has not been reached between all parties, then a termination can be followed through with, an eviction followed through with that point. So I don't expect this emergency period is going to continue beyond that 30th of September. I expect that we'll be well and truly out of things by then. So you have to keep the larger picture in mind, that this is your rental history, this is the roof over your head, and we all want to really do as much as possible to see that you get through this. So we are able to ask for proof of hardship, so a termination certificate from your employer or some sort of proof that you've had your hours reduced. And tenants are able to, if they feel like they can't continue even after negotiating a new price for rent with the owner, they are able to give 21 days notice now to end a fixed term tenancy. And in that scenario, no penalty break lease fees would apply. So that's a pretty tough pill to swallow for most landlords. The chat amongst the investor forums has been, why should landlords bear that releasing fee? But under the circumstances, that's the way that the legislation's gone, unfortunately. They're very weighted in favour of tenants, and a little disappointing that there wasn't a bit more of an even weighting, in my opinion. Landlords also can't give notice to vacate at the end of a fixed tenancy during this period, so they can't tell their tenant to move out, basically, during this time if the lease does come to an end. The lease would automatically roll onto a periodic lease if a new agreement for a new lease is not made. There's also no rent increases over this time, which I mentioned earlier, and this would include payment of deferral agreements. So that would have to occur after the 30th of September. And landlords do not have to carry out non-urgent maintenance during this time either. So that's a good little breathing room for some landlords that are struggling to pay for everything, so that maintenance can be put off until after this 30th of September date. So since I recorded my original update, the government has announced a up to $2,000 rent relief grant that is going to be really good support for our tenants and owners and help bridge the gap, whereby it'll make it a lot easier for an owner to agree to a rental payment reduction. And there's certain eligibility criteria, which I'll pop up on the screen. Now, your tenant basically needs to be in financial hardship, having lost their job and having applied for settling income support. So they need to have less than $10,000 in household savings and currently paying paying more than 25% of their household income towards their rent. And the key part to all of this is that they have to have had an agreed reduction in rent from the landlord. So by agreeing to reduce the rent, the tenant qualifies for this rent relief grant, and it helps bridge the gap, and the money gets paid directly to the landlord by the property manager or directly to them if they're not having a manager. And if there is no agreement, you can take things to the conciliation service, and providing it's gone there and tried to conciliate, then the tenant can qualify for this rent relief grant. And what that would mean is any money paid by the grant would be money that the tenant doesn't owe, and it'll just put them in good stead and have less money to repay later. So, and also encourage all parties to come to an agreement on a reduction. So a fabulous incentive, and I'm really glad it's coming out at the same time as the Residential Tenancy Act changes. The property clock timing. Now, the property clock doesn't really reflect the impact of the COVID-19 yet. You can see that it's relatively unchanged on when I came to you in December last year. Southwest WA now is indicated to be down at the bottom of the market. And we've had a few other changes around, with Darwin reaching its peak theoretically, and Perth still being in this bottom phase and not around into recovery. So I definitely agree with that. And on the units front, you can see that Perth was back up here, still in a declining market. So yeah, 12 to 18 months behind the housing market are the units. Now, let's go into some of the factors affecting our market on a bit of a deep level so we can start to unpack this. You can see that the availability of finance, the government has really tried to free up. As you know and think, when you think about it deeper, that the availability, the money that people have to invest, to do things, to upgrade, to keep their businesses going, to invest in their businesses, really has a huge flow-on effect to the economy. So they initially started by cutting the cash rate twice since I came to you in December. We're now at 0.25, which is crazy, the lowest level in Australian history, would you believe? So small business banking has also had a big relief package announced with $100 billion in unsecured loans available for small businesses. And they've fast-tracked the approval process and put a deferral option in place for up to 6 months for payments to be deferred for some of these new loans. That should help keep many small businesses afloat and get through this period, which will obviously have a knock-on effect to the housing market. Building approvals, I found some new stats and I'm happy to be able to report these to you now ongoingly. These are to January 20, so don't include the effects, and many of these stats ahead will not include the effects of coronavirus yet, but it gives you a feel for how we were tracking prior to. So you can see that our approvals were still decreasing for building side, and that's usually going to be one of the last areas to change, and we still had negative growth of 6.7% down in approvals over the last year. So until we kind of see that'll be the last thing that'll start upticking, and the outer areas that have a lot of the building going on, that's why they're suffering so much, because their approvals are down substantially. Now, employment, this is to February 19, again, before we saw the impact of the coronavirus, and we were tracking quite nicely with 1.3% for the year and 0.5% for the 3 months. So we were definitely upticking. You can see here in our graph a bit of an uptick in the annual moving average trend, if you will, back more towards the increasing in our rate of growth. So we'll have to see what happens and what's reported in the next coming few months. But that was more of a positive sign that we were starting to uptick. But as you can see, compared to when we were last in our growth phase of 2012-13, when we were up over 4%, we were still only tracking at 0.3% over the last year. So yeah, still had a ways to go in terms of getting back to where we were. Now, population growth, when the jobs grow, the population grows, the two often go hand in hand. And you can see this is till March 19, so I hadn't really still felt that impact yet of the coronavirus, but you can see that the estimated population growth was also starting to tick up slowly as well. So that was a very positive sign, and the interstate migration was trending back towards neutral, so it hadn't yet come around into the positives where we need it to be. So we need people to be moving interstate as well as from overseas, and as well as the natural increase in order for us to see pressure on our house prices again. So we'd had a 0.4% change over the quarter and 1% over the year. So still there was plenty of room for improvement in that before we see this move around into a proper recovery, but it was going the right way. Policy changes. Now, this is the greatest area to stimulate the economy on our recovery phase, and I'm keeping a close eye on what may or may not be coming. We already saw a blanket 2-year extension to planning approvals, which is great because any ones that were due to lapse, any projects that have had to be deferred will now still be possible to be done. And we have had talks by the Real Estate Institute WA that are lobbying for a 75% stamp duty rebate on all property purchases. And that'd be certainly a huge way, a huge stimulus to spark the recovery of the real estate market. I'd love to see that getting through. Other states around Australia are also lobbying for similar changes and more changes. So what happens in this space over the next 3 to 6 months is going to be absolutely critical for how fast we recover and what happens to the housing market particularly. So watch this space. And if we can get something like that stamp duty rebate through on all purchases, I'd be very excited to be taking advantage of that myself if possible. So some tips to survive and thrive. Speak to your finance broker at the moment to renegotiate your interest rates or refinance to other lenders. With rates being as low as they are, you can make some huge savings just by going and asking the question of your current bank if you do want to take it up with them directly. But if you do have a finance broker, it comes across really well because the banks then know that you're serious about potentially moving and will be, probably more likely to sharpen up their rate if the request is coming from the broker. Now, keep in mind, if you are going to refinance, you need to be able to get valuations, and that could be problematic. So start with your current bank and chat with your broker about potential for refinance if that's there. And it could be worth considering tipping in some money if you're able to significantly reduce your interest rate. So weigh that up together and work out the best plan. Now, if you are actually affected, as a business owner or an employee, make sure that you get all of the government grants and assistance. And there are options, of course, to pause your loan if you're affected for up to 6 months. And there are other options to pause rates and utilities and insurance with the different providers. So get in touch with them if you are going through hardship, and make sure that you access those things quickly. And on the side of more looking at how you can make the most of this market moving ahead, it's a good time to go to and get your financial house in order, and check your borrowing capacities, check what could be possible for you in this market ahead. It's going to be a very exciting time to look at buying, both in the share market and the housing market. So I would definitely be checking in on those things, as I am myself now doing. And also, you can be pretty surprised when you start running the numbers, because if you can get a loan at 2.5%, 3%, it suddenly makes things a lot more affordable when rents are at 4 to 5% in yield. So the actual holding costs, you'd have to be pretty hard strapped to find something that's too negatively geared at the moment. So positive gearing is definitely possible, and a lot more possible to hold properties that you buy. But keep in mind to factor in for interest rates coming back over the next 3 to 5 years, and hopefully we'll also see an increase in rental prices somewhat too. So my crystal ball, what am I seeing for the road ahead? Our market's definitely in a state of shock at the moment, and it's really much a case of buyers waiting to see, sellers waiting to see, everyone waiting to see. And we're going to likely see a relaxing of restrictions, returning to a new norm over the coming 3 months. So we probably have the state borders continue to be shut, but access more possible to other services and businesses, start being able to go to cafes and restaurants again, potentially get some more businesses going, and preventing probably international travel for a while. And I would expect some further stimulus to kickstart the economy on the back of this, both at the state level and federal government level. That's going to be absolutely key for seeing how long we stay in this next phase. And I'm definitely seeing rental market continue and go very well with still a lot of activity. So I expect that there'll be greater pressure on rents increasing over this period. And even though we won't be able to increase to existing tenancies, that increase will be definitely, I expect, there on the other side of this 30th of September. The sale market, I expect, will hold its values, because anyone in serious financial difficulty, unlike other global financial crises, they're able to go and pause their loan, they're able to buy themselves time, and many people that don't have to sell have just come off. So I'm seeing that this will probably hold in values, and the speed of its recovery and how fast we get going again is going to be really impacted by the stimulus. And will stimulus be targeted directly at the property market, or will it be to business and other aspects of our economy? So that's where we really need to see, and I'd love to see something targeted at the property side. So you've obviously gotten through to this point. Hope you hang in there and you're doing okay with both your mental state and physically well. From my family to yours, I really do wish you all the best, and reach out and get in touch if you need some input, both on selling or renting. We're really doing our best to help everyone through this time, and we're getting some great results still in what is a difficult market. Thanks for watching.